talk about major versus minor support. Okay, so that'll be today's topic. So first, let's start with the Qs and SPY. Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for November 5th, 2020. Coming into today, we acknowledge the bullish bias, the alignment that we had now with the uptrend on every time frame for the Qs and SPY. We did have a short bias for a couple days there, and especially the SPY was able to get back down to the lows, but as we negated that pivot, had to go back to bullish here. We got a gap up today. And you can see that the initial selling did get bought. SPY is going to be closing up around 1%, Qs up 0.2. Okay, we talked a little bit about the when does divergence matter? When might divergence actually signal kind of a trend change or something coming up? So if you were to look at today and say, well, now the Qs are maybe a little bit weaker than the SPY, and say, well, does that divergence mean anything? Looking at it here, I can't say that the Qs or SPY are bearish or in a downtrend. So if anything, if we were to kind of read into that underlying, that is more indicative of sector rotation, which is going to mean that probably higher prices ahead, because we saw a lot of sector rotation throughout this nearly 11-year-long bull market that we've been in. And so sector rotation, not really indicative of any kind of top here. And I think we've been pretty clear about what we would need to see in order to get some kind of market top, which is always going to be kind of a discussion whenever we make new highs. And that is either a large trend breaking type of gap down or kind of an acceleration away from the 20 MA, multiple bars up kind of thing that's going to put in some kind of blow off top. And so since we haven't gotten either of those, we will continue to kind of wait for that. And going into tomorrow, I think just bullish bias, same as today. Okay. All right, let's get into today's topic. I wanted to talk about major support and minor support, and where I find that most people kind of would benefit from really knowing the difference is when they go to a break-even trail. Okay, I'm going to go ahead and remove this here because we will be marking up this chart in other ways. All right, so we'll first kind of start off with this OI, which had a nice gap up today to start things off. Going to be a pro gap because it's not extended away from the 20 MA. And I liked the room that it had, kind of a wide range bar and void up above. So I liked the kind of overall potential of this. I think one thing that was a potential problem was that it was up multiple bars without being novice, and then also kind of was up a lot on the day already. Okay, so here was the play on the OI, okay? And I think this is a pretty good example for today. So 1530, so this is where when we broke over 1530, where we were initiating our long position, okay, right in here. Okay, right there, okay? And our stop was going here at 15, right? Because we'd seen that this area would hold, it's kind of ran into some selling initially after the first run up and held. That was going to be our support level. Okay, so now you see the call there, and then what the target was, 1560, right? So not a big first target, right? And so what I saw today, and I know some people kind of aren't always able to trade from open to close, so sometimes they'll go to break even a little bit early. Now, the problem with the break-even trail, right, is that what we're playing is this breakout when we break above this resistance, because at the time, it was keeping a lid on price. It was basing at it, right, keeping a lid on price, right? And one thing that I really liked about it was despite the fact the market was getting sold this morning, this was staying very, very strong. Didn't want to come off the highs, okay? I would have preferred if it based longer, but some of these things, we can't control. So it did break out, right? Break out and then got almost to target. I think 53, something like that. Just needed, 53. And so, especially when the play has shown you some profit early on, I think that's when we're most susceptible to not wanting to live through a pullback, right? Because the act or the feeling of being up and then watching that profit, kind of unrealized profit, disappear or shrink, isn't a good feeling, right? And so that's when we're most often just gonna go to break even. Hopefully it keeps going and try not to lose on it, right? And so that gives us a little bit of security in that we're like, oh well, we can't lose on it. But the problem is that our break even point, especially if you play breakouts, breakdowns, should now serve as a support area. So what you don't want to be doing is getting tagged out, right, and then watching it go right back up, okay? So, of course, some plays are going to, fail, and then you feel like, oh, I could have gone to break even maybe a little bit earlier, something like that. But when you're doing it too often, right, is when you're going to miss out on the targets. And if it so happens that maybe going to break even a lot is actually saving you from taking a lot of stops, then there's a bigger issue of you need to change your play selection, right? Because yes, going to break even a lot and it's actually saving you on losses can give you a little bit more time to make adjustments. But if you're going after the right plays, the things that are most likely to have nice moves, the things that are likely to get to target, right, going to break even too often is gonna get you out of a lot of your best plays. Okay, and that's because this, when it breaks above, becomes minor support. Now, if this comes all the way back down, say this pullback had come all the way back down into this area, okay, then, right, and broke that, then yes, you'd want to be out. Because if this is not going to hold major support, right, which is an area that's already been tested and that the bulls showed that they control, if it comes all the way back to here, then yes, you do want to get out, take your stop, and be out of it, which in this case, right, eventually we do see that happen as well. Because if it's going to do an uptrend, and that's what we're hoping for when we play something that is trending, expecting it to get to new highs, we are playing it with the expectation it's going to make higher highs and higher lows, right? Not equal lows, right? Or equal highs, right? And so if this is really going to maintain the uptrend, right, then we should be reacting to minor support. If it starts to become major supports in play, then the play most likely won't work. And that's why the stop is there. Because if it actually comes back to there, and especially if it takes it out, then the play is likely to go further down from there. The uptrend is over. Okay, so that's what we look for in minor support and major support, right? So a minor support is going to be an area that was previously contested and that the bulls most recently took, right? So it was resistance, now becomes support, okay? Major support is going to be an area that was already tested, right? And then we come back in to test that exact same area, and those are usually indicative of, if that happens, the uptrend is now in question. We may be going into a sideways trend, which we're getting a lot of equal highs, equal lows, right? So the main concept behind a sideways trend is going to be major resistance and major support, because those areas are continuously being tested, as opposed to minor support being an area that was previously resistance, and then on the next time we come back to that area should be minor support. Okay, and that's how uptrends should maintain their higher highs and higher lows. Okay, so just be careful about that. It's something that I experienced a lot early on in my trading, just because it feels good to take risk off the table, to not have any kind of risk of having a losing play. And I mean, it's not that I don't ever go to break even. I think it's fine to go to break even. What I prefer to do is after a first target or after a second target, right, then go to break even, right? If it's already you got you some profit, you've taken some off the table, you don't need to let the play turn into a loser, right? Or give the whole thing back. After that point, right, break even, I'm a little bit more comfortable with and willing to do. I think it's these kind of plays which show you a little bit of profit initially and then start to do the pullback, which we're going to be the most tempted to go to break even early because we saw the profit, we also saw it go away, and being around that break even level is where kind of our emotions, attachment to P&L is more sensitive. Okay, so we just want to be careful about that. All right, so I know this kind of got some people today, even though the official play didn't make any changes here. I know some people, just the having to live through this pullback initially looked really good, multiple green bars in a row. You don't really want to live through a pullback, but the problem is when we go to break even too early, a lot of times it gets you out at the worst possible spot. Okay? All right. Hope you did well today. All right. If not, we'll be back at it tomorrow, and I will talk to you then. All right. Have a good evening.